Hi, I'm Kara Murphy, and this is Money with Murphy. Let's talk about commodities, a part of the market that often gets overlooked. Lately, though, many commodities have been quite volatile. When conflict began in Iran, for instance, oil rose substantially. Then, when peace talks appeared to take hold, it fell precipitously. Other commodities have moved in more unexpected ways. Gold, after putting up incredibly strong performance last year, fell significantly this year to date. And then there are industrial metals and agricultural products, each with their own trends and stories and impacts. To help sort through this noise, I had the great fortune to talk with Kriskey. She's a commodities expert who's been in this business for 3 decades. Stay tuned for some of the highlights.
I love gold, but let's go through it. So just to give the little bit of a history, right? Because a lot of people look at like interest rates and the dollar in relationship to gold, and that relationship had broken, right? Because of central banks, right? So I'm going to talk about that. So when Russia went into Ukraine, we froze their US dollar based assets, all their treasuries, right? And all of a sudden every central bank was like, oh my goodness, they can do that. Like we have all of these treasuries. Treasuries is primary thing that central banks hold, right? Because it's secure and it's liquid and it's great,
Mm-hmm.
right? But they're like, oh my goodness, those can be frozen. So that's when we saw in 2022, we saw a massive jump up in central bank buying of gold. I called it the
So,
de-dollarization. So
can
again,
I just
huge ramp up, 22, 23, 24, even last year. It was a little bit less last year, but still higher than normal. So now the average gold holding for a central bank is 24%. So their reserves, 24%. Like China, though, has been the biggest. So before this happened, right, before Russia went into Ukraine and all of that, China only had it was single digits. We don't know how much, but it was like, maybe 3, 4% was gold. I'm sorry, what yeah, it was gold. So they started really ramping up and driving a lot of this move. And so now, even with all of their buying, they have said that they have 8% in gold, but we believe it's more 11%. And again, because they don't give us real numbers. Why did oil not go up as much? One of the things is like how demand for oil. The biggest buyer of oil in the world is China, right? Now, China does a lot of refining. So they buy loads of oil and then they refine it and then they export those, refined products. So we noticed in March of 2025 that China was buying an extra million barrels per day, right, beyond what their normal consumption was. So we're like, that's interesting. They are stockpiling oil, right? And
Mm-hmm.
so we thought it was in prep for Taiwan because they get their oil through the Strait of Malacca, another strait that people are probably going to learn the name of at some point.
Yeah, yeah.
But basically, so they knew that the U.S. has bases near the Strait of Malacca, so we thought just prepping for that. But really, when this war happened, right, they had enough oil. And the other thing that they did is they stopped exporting their refined products. So now the refineries don't need as much oil. So they bought 4 million barrels per day less. So they went from like buying an extra one to four less than normal. So that was another reason why we had, like that prices did not go up. And a lot of people didn't realize that was happening. Military spending, right? So everybody now is like, especially Europe, right? NATO is got their marching orders. They know that they have to be able to defend themselves. They couldn't come to the U.S. side really, because they didn't have the military build out. So, and military build outs require industrial metals. Right. So I think
Mm-hmm.
that's one thing that was not on a lot of people's, like I call it, not on your dance card.
But with that, we're also seeing some of the pushback with AI infrastructure.
Yes.
So then as we think about commodities and all those commodities that are needed to like power up and build and run that infrastructure, like there have to be kind of some downstream impact. So how are you thinking about the impact of AI?
Yeah, I joke with people and I say, I want to train you that when you hear AI, I want you to think copper, right? And it's
Yeah.
like you literally can't turn on the switch without, and it is so much copper, right? And I referred to before, like the time that it takes from discovering copper to getting it out of the ground, like no joke. Like I was in Chile and I said to them, I was like, we need more copper. We really, and they're like, Kathy, we're doing as much as we can. They're like, do you know about the sulfur thing? I'm like, yes, I know about sulfur, but but the problem is that we do not have enough copper to support the build out of the data centers, right? And so I track, like the data center build outs, and I keep waiting for it to level off, right? It is not. It is still a very steep incline in these increases. And I know there's pushback and people don't want a data center near them and all that. But these data centers use a lot of copper and aluminum too, but copper is the most, the
Hmm.
one that it uses the most. And so one of the stats that I read was that by 2035, it is estimated that the market will be short have a 30% deficit of copper.
It's worth noting that when putting together portfolios, we think of commodities a little differently than stocks and bonds. Commodities can be a very helpful hedge when inflation is rising or when conflicts break out around the world, but they can also experience long periods of underperformance. So it's best to size any exposure to commodities very carefully and to keep a close eye on them. Until next time, invest wisely and live richly.